Time for the multifamily news weekend briefs. How are you today?
Hey, I am just fine, just fine. Just enjoying the rain. And I heard the weather is going to be a little cool. So, yep.
Well, and Zach has a lot to share with us today because he's down in Houston. What's going on, Zach?
Yeah, well, we got fortunate. We missed a hurricane, thankfully. But other than that, a lot of opening up in the markets in Houston for sure. So there's some updates to tell you guys.
Oh, I'm
Fantastic.
excited to hear about
That's what I'm
that.
talking about.
Daryl, what are you going to talk about today?
Well, let me tell you. Today, Commercial Multifamily Mastermind Group presents the weekend brief for August 28th, 2020 with
Daryl, can I
Julianne
ask you
Peters.
can I ask you a question?
Sure.
Should we be seeing your slideshow?
You can't see my slide?
I can't, so I thought I would say you look like you wanted to show us something.
Wow. See that? That goes to show everyone that we are live. This is not some pre-recorded stuff. We are live.
There you go.
Let me.
Excellent.
All
That's
right.
me, Julie, with old capital.
I know. So here we go. So Commercial Multifamily Group presents the weekend brief for August 28th, 2020 with Julianne Peterson from Old Capital. And we have Zach Week from the Multifamily Group. And we have me, Daryl Murphy Sr. from the Murphy Banner Group. So today's brief will be coming from globestreet.com. Some multifamily investors are underwriting 4% rent decreases, but investors are also seeing COVID discounts of 4 to 10% on acquisitions during the pandemic. And this, the author of this is coming from Kelsey Marie Borland, and this was on August 25th. Tryon Properties is staying busy during the pandemic. The company is reporting strong rent collections, new leasing activity, and has remained an active buyer through the pandemic. This year, it expects to buy 6 or 7 additional properties, adding more than 600 units to its portfolio. I just messed up. However, the discount makes sense considering Tryon is anticipating declining rents for the next year. The firm is underwriting negative rent growth of 4% in the first year and positive rent growth in the years following. We are assuming negative rent growth year 1 and positive rent growth year 2, 3, 4, and 5 on a 5-year hold. If you blend year 1 and 2, we are at 0 for the first 2 years. So we are assuming that 2 years from now, rents will be where they are today, says Sharkansky. It said, we think that it is a fairly conservative way to underwrite. You should see the rain out there. As for the firm's current portfolio, rent collection and occupancy has remained healthy with nominal declines due to the pandemic. In our portfolio, market rents have stayed pretty strong, says Sharkansky. It says, we typically buy in the first ring suburbs. Those pockets have held up nationwide. I think that is a reason why we are doing well. New leases were a similar story. New move-ins have held strong, says Sharkansky. Our occupancy is 93 to 94% instead of being 95% pre-COVID. In July, we burnt all our concessions. We reintroduced some at a couple of properties that needed a little bit of a boost, but we are almost concession-free portfolio-wide. August rent collections have followed a similar trend as previous months despite the expiration of unemployment benefits through the CARES Act. With some new benefit expected to come, Sharkansky is also optimistic about September. The pause in unemployment benefits for a few weeks did not have a huge effect on our portfolio. Some properties fell behind, but there was not a huge impact portfolio-wide, he says. Given that unemployment benefits are restarting, I would expect September rent collections to be where it has been in May, June, and July. On this operational front, we have had some people with balances leave, which helps, and we can release those units to people that are paying market rent. And that's me. All right, Julie, take it away. What you have?
Well, you know what? It's been a crazy, crazy Friday. And so I've been trying to think about my week. We've been connecting with a lot of people, been on a lot of Zoom calls and such. But there was one thing that really stuck out for me today that I wanted to share with you. Well, you know what? I am in California and things are crazy in California, but a lot of things start in California and they go to other areas, especially if people think, hey, that was good for people, they'll go to other places. So I'm bringing to you some information that I think everybody should be aware of. And if you have the desire to support it, there's Prop 21 that's hitting California, especially in the upcoming elections. This is rent control that they want to implement across the state. And again, if it starts here, we already have pockets of it. San Diego has rent control. We can increase the rents 7%. But what this Prop 21, one of the tenants says, it's part of the Costa-Hawkins, and you guys can do all of the research, but what it says is when a tenant moves out, you can raise the rents. If it gets in, the Prop 21 gets approved, you cannot raise the rents when they move out. This is a killer for landlords because you know what? The value of your property is going to go down. You can no longer have regular rent increases. How can you do any rehab? How can you improve your properties? So a lot of people are starting to say, hey, I want to get the heck out of here because if it starts here, it's going other places. This guy, Michael Weinstein, he is the one that did Prop 10 and we fought it and we won. This is the next one. And he has said he will fight this until he wins. So if it's not this one, there's going to be another one. But the landlord associations are trying desperately to get this out into the open. That's kind of what I'm doing. But at the other side, this guy is putting out social media that is showing that this is the best for the American people. So at one point before COVID, it was a 55% support for no, and now it is down. They've gained on the yes part of it at 50%, even higher. So what that says is COVID has really brought out this idea that there are governments, there's people in governments or large corporations that own these large assets, when really only about 6% is owned by corporations. The rest of it is like you and I. So this is going to be very impactful. I would really ask that you all talk to your friends, and if you guys are interested in not coming to your state, think about donating $100 per door. Where you can find out more is at www.noonprop21.vote. This was so important that they put, Marcus and Millichap put together a webinar yesterday just so that everybody knows, this is just not a California thing. This is nationwide. While it could start here, it could impact you. So really think about that. In terms of pricing, hey, we are still low. Keep in mind, Fannie and Freddie are really looking at your sponsorship, that they are qualified, three properties preferably to be a sponsor. So keep that in mind when you're looking for somebody who's going to be a deal sponsor on your deal. Make sure that they qualify and that you're bringing in capital. All right, that's all I got. How about you, Zach?
But,
What's going on?
but before we go to Zach, Julie,
Yes.
give me that URL again.
Yeah. www.noonprop21.vote.
No
Vote.
on prop. Now, could I spell out 21 or just put 21?
21. Thank you.
Okay.
21.
Dot vote.
Vote.
VOTE. All right, because I'm going to put that in the notes.
Yeah. Thanks.
All
I
right.
think we crazy things happen in
Now,
California, but historically, when this impacts the amount of people, it'll go like wildfire to
right.
other states.
So www.noonprop21.vote.
Correct.
Okay, and plus you got me doing some research because if I'm not mistaken, I got out of New York just in time because they already doing that in New York where if you move out, you cannot raise the rent. They doing it in New York.
That's a terrible thing. I am sorry.
Yeah. Well, that's the liberal states, but
Have they passed that before in California? Have they proposed that before in California, Julie?
Yeah, that was Prop 10, and we fought that.
How
Now
long ago?
there are cities that you have to pay to get your tenants out. So when people are underwriting the deals, they're saying, okay, unit 10, I got to pay 20,000 for them. I got to pay 20,000 for that guy. He's only been here for 5 years. It'll get him out for 10,000.
Wow.
It's terrible.
Yeah.
wow. What you got, Zach?
Yeah. Especially I would say the past few weeks, Houston has definitely been opening up in interest in selling. Houston in the past 5 years, we got an upload of multifamily development, specifically in Class A properties. In Class A properties, we started to see a decline in rents, pricing, and a lot more concessions being offered. So, I mean, just for myself, I was just looking around at apartments and the Hanover properties, a prominent developer here in Houston. They're offering 8 weeks free for their properties they just built. So it's crazy. I mean, a 1 bedroom.
8 weeks?
8 weeks. 1 bedroom right now is $1,500. I would say 8 weeks ago or 2 months ago, it was about $2,200. So it's crazy. It's absolutely nuts. And so if you're looking to get a 1 bedroom right now is the time to get a Class A property. And also one thing I learned was there's a affordable housing shortage in Houston. Usually when people underwrite, they want 30% of the person's income going to rent. 1 and 2 renters in Houston, it's more than that. So right now, a lot of developers who are looking into affordable housing see the upswing and the possibility to continue to develop in there. When it comes to Class C properties, emerging markets, neighborhoods in Houston are the best places to continue your value add play. And so right now, I'm doing a little bit of research is East Downtown in Houston, because it's next to the light rail. A lot of restaurants, the nightlife, it's developing a lot. A lot of developers are coming in there, tearing down old vintage homes and developing multifamily, or they're upscaling their Class C properties there. And then if you're looking at a long-term point of view for Houston, it's follow the jobs. And so you got the markets like the Woodlands, who have ExxonMobil campus. I'm talking to a lot of developers. They're loving that area. Also Katy, headquarters are moving down there. This oil and gas company just added 1,000 jobs, Saudi Arabia headquarters. And so those are when I'm just looking at neighborhoods where you want to put your money in Houston, those are just some high level ones that stood out to me and from the research I did. So that's kind of it from Houston. Also, what I've been seeing is sellers are, if they say their occupancy is 85%, they want to sell the property based off 95% or 90%. So they're asking you to underwrite it better than it's performing. So that's kind of been a challenge for buyers. And so I think it's still a waiting game. They're still trying to get that discount, just as you said, Daryl, that 4 to 10%. I think it may come soon. And so we're starting to see the delta, as I've been explaining these past few weeks, come closer and closer in the Houston market.
I would elaborate on that also from a finance side. For Houston, it's kind of been with oil and gas just recently. The numbers have been taken away, whether it was 75 now down to 70, but they are opening that up. I spoke with one of my lenders today. So with COVID and the issues that you guys have experienced recently, we've pulled back our numbers and our underwriting, and so you should see that changing over the next month or so.
Wow.
That'll be helpful.
Has any changes in the reserves for Fannie and Freddie at all?
No, only thing is you still have your principal and interest, but they also are doing the replacement reserves. So that's a requirement in an escrow account that does not come back, but that's just pretty standard.
Yep.
Mm-hmm.
Okay. All right. Zach, in reference to the price dropping, that's a drastic drop for A class, from say 22 $2,000 to a $1,500, even for a studio. But do you also see that that affecting the B class properties and the C class properties? Because if those prices are dropping on A and they're coming close to a B or a C, then I'm thinking that those B and C's are dropping.
Yeah, I mean, just from I was reading what an affordable housing developer said you can still make good cash flow off $2,000 rents.
Right.
And so, when you think about your A class people, if they can't afford that, they go down to B class. So I think your B class is that cushion area where it's affordable. I don't know. I don't know what's going to happen, but that's just something I noticed in the A class property, because I went to go look at an apartment, and they're offering 8 weeks free, $1,500, and I was just like, what was it before? And so it was just a huge drop off. So it's very shocking.
Right. And you also mentioned about the sellers, the way they may be at an 85%, but they want people to write at a 90% or 95%. When they do that, do they realize, understand that investors are underwriting on how that property is performing today, that investors don't speculate and try to write on a prediction of what's not yet to come?
Yeah, I mean, a lot of the investors that I've been working with are underwriting it as if today, and not allowing rent growth to happen for these next couple of years. And so I think it's a patience game. If the person's really motivated to sell, they'll come to grips with, this is what the market's asking. And so I think that's where we're at.
Gotcha. All right then. Well, that's it for all of us. What y'all doing this weekend?
Nothing.
Nothing.
I like those kinds of weekends.
He said nothing. Julie said nothing. What about you, Zach? I'm
gonna start training. I got probably a new endurance challenge coming up, and so start training again. I'm a big endurance guy, so I do a lot of running and
good. Oh, okay.
So I'll start
fantastic.
back into it.
How far is your longest run?
50 miles.
I dated a guy who ran 150 miles.
Wow. Yeah.
I told him to keep running. No.
Yeah. I attempted a 100-miler, but I stopped at 50 last year. I was going to go attempt it again this year, but COVID canceled it. So.
Wow.
Yeah.
Well, you
guys are made kind of special. You're special.
There's something.
Yeah.
I haven't ran that far since I was in the military. In the military, I used to run like that.
Yeah.
I prefer to drive.
Yeah.
Yeah.
I think everyone does.
Well, listen, y'all have a great weekend. And
Thank you, you too.
Wait a minute before y'all leave.
Yeah.
Tell everybody how to get in contact with you.
Yes, great. My phone number is 972-833-2774. You can contact me through, Facebook, LinkedIn, or send me an email, jpeterson@oldcapitallending.com.
Fantastic. Zach, tell everyone how to get in contact with you.
Yeah, I mean, every social media platform, you can just type in my name, and I'll respond. You can also text me, call me, 713-855-7375. If you have a deal you want to look at in Houston, I'd be happy to share more with you.
Fantastic, fantastic. And everyone, you know how you could get in contact with me. Not just me, but also with Julie and Zach. Just, you could type a question right here on Facebook and put our names there, and boom, we'll be tagged on it, on the question, and we'll get back to you. But don't forget, Tuesdays from 11 to 12 Eastern Standard Time, we have Lunch and Grow commercial multifamily meeting. The group is starting to grow. We're getting other investors coming in. So I hope you could join us on Tuesdays from 11 to 12, the Lunch and Grow commercial multifamily meeting. All right. All right, everyone. Take it easy. Zach, Julie, see you next Tuesday. I mean, next Friday. No, see you Tuesday. If you could come, and see you Friday for the weekend brief.
Thank
Take it easy.
you. Have a
All
good
right.
one.
Thanks, guys. Bye-bye.